Hello traders, Nick Shaheen looking at Sarepta. SRPT is the ticker. We all remember the shocking drop, 50% in one day. I did a video on it. It was a pretty popular video and I had some good reviews on it. So the idea was that on a monthly basis, this was a support zone into 70, which was a weekly bounce level. And I said if I hadn't panicked already, or if I'm still in it after this drop, $10 wasn't that much to wait out to see if that was indeed the bottom or not. So far, so good. At the time, I said, let me see here. Okay, so I remember saying that if I wanted to, quote, catch the falling knife or double down, I would do it by selling puts. And those puts are completely played out in the favor of whoever did them back then because the stock held up. And the puts I was going to leave a lot more room for error. I think it was $50 levels. So they never came to play. So if I sold them, they died in my favor. Whoever bought them lost their money. I'm doing this video not because I'm an expert on SRPT, but I do know charts. And I'm trying to get myself not to go book some profits. Yesterday I shared the Boeing breakout overnight. And recently, Fubo and a couple other tickers, Jumia and Nvidia, on all those dips were golden opportunities. And people said, no, panic out. I said, we're going to make new highs soon. That was on March 4th. That was the depth of the correction. And guess what? We're making new highs today. So don't listen to the experts in the news. They're in the business of having you watch, and they create drama. Because if there's no drama, you're not going to watch. Anyway, back to Sarepta. I'm truly helping a friend. Priscilla asked me if she could write calls against her stock. So not to give her any advice as to what to do, but I'm going to say what I would do. First of all, writing calls means selling covered calls, putting your stock to work while it finds a bottom. So the idea is to sell a call, meaning if I own 100 shares, I promise to sell my shares to somebody at X level, and in return they give me money now. So the idea is I own this asset, let me put it to work, and the worst case scenario is I write it up to a level and then I have to sell it and keep the premium they paid me. So somebody's reserving their price. Like if somebody believes it's going to 115 in a couple of months and I think, you know what, it's not, so why don't I, or I'm okay leaving it at 115, let me collect some money from this person. So I would sell a call. So it would look like this. I don't know what the premiums are. See, it's still on BA. I did a video on it too when I shared the trade. I have a link to the chat room down below. It's not free to be in the chat room. We do a lot of good work, and but it is free to try it out. The link is PayPal, but it's $0. I just need to know that it's real people and not trolls trying to badger us in there. We have about just under 300 people, all nice traders of all styles. Okay, so let's say April. I don't know when they report earnings. Do we have an idea? Okay, they just did, so good, no incidents. So I chose, let's see, 110. So if I'm willing to sell my stock at 110, I can collect, $1 per premium, a little over today, for promising somebody, you know what? It's 85 now, 87. I'm willing to sell you my shares for 110. Here's my contract. So I would open it up. If I have 100 shares, I do one contract, and I collect $100 at just over. And as soon as I send that order and somebody buys it on the other end, then it turns into a live promise. It's a contract. That's what options are. The contract, we negotiated the price. It's $1.15, meaning I made the promise to somebody on the other end, the buyer of said promise, and the time frame on it, just like any other contract, it has 36 days on the clock. After 36 days, within those 36 days, the buyer of that contract has the right at any point in time to call me up and say, I want your shares. And it doesn't have to be above 110. What did he just say? Yeah, it doesn't have to be above 110. People think it does, but it doesn't. It could be anywhere, but they'd be idiots to do it now because they give you immediately profits from 87 to 110 immediately. I don't know why anybody would do that. That's why people think it has to be above that. It doesn't. But the point is, as soon as the transaction happens and I'm short that call, it goes against my shares. There's no extra risk. The only risk is I profit all the way to 110 or recover in case if I'm long from above it. And then after 110, I'm out the shares. I keep the $1.15, so my break-even point would be $1.15 above that. So 111 rounding and above, I'm missing out. That's it. That's the only risk when I sell a covered call. I never sell naked calls. Look at all those guys and gals that did it in GME. They went broke. If they sold a call at $20 and it went to 500, 400, whatever the heck it was, that's all unlimited losses for as long as that short call is open. That is not the way to do business, people. I like knowing what the maximum risk is. Okay, so that's the selling call. And the question is, she's thinking about it. Actually, she's not asking me if I should do it, she should do it or not. She's thinking about it. What do I think of the levels? And this is the conversation. What do I think of the levels? This is the chart that I just shared. And let me walk you through the scribbles. I promise it makes sense. So this is an attempt at a bottom. Slightly higher low, both tall candles, which is good, meaning the bulls are, no, we don't want to be here. So what you want is more of this. So that's job one. Keep that ascending trend alive. Job two is you're going to hit the resistance lines, and those are them. And if you have higher lows, that means the bulls is making progress, even though they're not making progress on the wall above them, but they're making progress on the force with which they're getting at. So the tightness, the price action is getting tighter, and then it becomes easier to break through. And usually they break through, they come back and touch it, or just below it, that's fine. And then they repeat the process at every line, failing line. Now this is the big one. So the gap up here is massive. We all know what it was, this one. In my experience, this little guy right there is this little guy here. Those are not easy to crack into. Remember Intel? Took forever, and then when it finally did, it hit another company did the same thing, Oracle or somebody. It's hard to get into these big gaps, especially when it was for a reason. It wasn't like fake headline or something. It was for a fundamental reason. So it's going to be, I think, difficult to get out of here. So if I sell any covered calls, it'll be at 110 or 105 the least. And selling the calls can be at different time frames. I chose April. It could be weekly. If I'm really active and I know what I'm doing and I want to collect $1.30 at 88.5, that's my business. So this has only 1 day left. By today's Thursday, almost said Friday. So tomorrow is expiration day, 3/12, and I can scalp 90 cents, which means $100 ish per contract at 89. So what happens if by tomorrow it's under 89? Then this $100 went into my pocket, took out $1 away from my losses if I wrote it down from whatever, and then I can repeat the process for the week thereafter. I go higher, another 91.50. But what's the bad thing about this? What if it does spike? Then I'm committed to getting out at 91.50. Now there are ways to get out of it, but by quote rolling, which really means you book it here, the loss, and then you move it somewhere else. It's manageable, but if I don't know what I'm doing, I should pick a level that I'm really okay getting out of. I don't do these short-term ones unless I know what I'm doing. I don't sell that into an earnings report, so I have to make sure. So if next May has an earnings report, I don't sell the 115 and collect $230 right now, because that might be my relief. When is earning? 5/5. Yeah, I would not do May, because what if next earnings report they have the antidote for whatever ailed it in the last one, right? So if anything, I would sell the April 30th, and even then it's too close, because sometimes people pre-announce. I don't know why they do that. It's like the bad news. Hey, we're going to have bad news back then in front of us. It's the same difference. Tell me the bad news whenever it's coming. So maybe this one, but April probably is the best shot. Every situation is different. Every situation is different. So what if I liked the stock and I wanted to get into it? Then I'd consider selling puts instead of buying calls. That's my opinion. In this case, I did not zoom out. Let's zoom out. Reset. So this is a long consolidation weekly. This is about 5 years worth of business here. And look at this. And they say people don't believe in technical analysis. This here and this here. Yeah. So this was the bottoms I said. If I was here trying to get out in panic, I wouldn't, because $10 will bring me down to here. I would rather see what happens with that. And sure enough, they came close to it and bounced off of it. So the assumption back then was correct, or the analysis, the plan of action. Also, look at this. So this 70% level should be bulletproof. So if I wanted to own shares, let me repeat that. If I wanted to own shares of SRPT, and leave room for error, I would sell $70 puts or $60 puts out in time. And then this way, I don't own the shares, but if it does fall, I then own the shares. And they pay me $300 today to commit to buying them at 70 for 71 days for 100 shares. And what if it doesn't go down there? Then I made $300 out of nowhere. What if it does rally? Then I made $300 out of nowhere, but that's it. What if it rallies $1 million? I made $300. That's it. So there is a bad thing that my winnings are limited, but the good thing is I'm leaving a big room for error, just in case. All right, this was it. Helping somebody out. Thanks for the question. Needless to say, nothing here is a trade recommendation. Like, I would not sell puts just to try to make money. I would sell put spreads, because if the market's correct, and they do correct out of nowhere, this stock dropped 50% out of nowhere, nobody saw it coming, then you're out serious money if you can't buy the shares and wait. So I would not do it unless I want to own the shares.